All right, good morning, everybody. Just start with these screenshots. Um, I'll pause here for a moment so you can grab the levels. This is for SPY. And that is for the ES and the SPX. Those are spot gamma levels for the day. All right, so we're continuing the expansion in crude. We are coming up into some significant resistance though. So there's, an expectation that we've kind of run its course. To get through this, very likely going to need more, right? Going to need a bit of a catalyst. Otherwise, we're likely to stall underneath here. This is a daily chart, so as you can imagine, it's going to take, at least a week, looking at the previous moves, at least a week to work its way through there. We are sitting right on the edge of an inside day breakout. Kind of flirted with it a little bit and came back in again. That's in Brent crude and WTI. Asia turned things around. Hong Kong had an inside day breakout to the upside. It's just barely sticking at this point. Lots of liquidity overhead. It's really unlikely that it's going to get anywhere today, especially considering they're closed and it's just the after hours moves that we're seeing now. The recovery day on the FTSE, the doji day where we rallied back up, nice follow through yesterday, but the follow through really didn't get very far, right? If we were going to trigger into those stops and propel farther, that green candle yesterday should have come all the way back up to the top if it was a really good TRB. And it wasn't. It was kind of a dud, really. And now this morning, we're sitting range bound inside of the previous day. They've got a lot going on. Even today's morning briefing is titled More ECB Speakers, because that's what we have on the agenda today. Christine Lagarde is supposed to talk at around 9, maybe 9:15, and then we have US Barr is speaking at 10. If we come over here to the economic calendar, we can see Christine Lagarde's speech today is anticipated impact greater than anything else on the agenda for today. Now that doesn't mean that it's gonna be, right? It could be a dud. So minor econ and a lot of different Fed speakers from around the world are out chipping teeth, and it's those kind of talks that can really move markets. We do have additional auctions today. So leaving aside those people that are talking, we still have econ at 8:30, 9, 10, 11, and 1. It's a full day. And this money supply very well could be an issue too. Gets into M1 and M2. So full house all the way up until 1 o'clock. By 1:30 though, whatever we're gonna get, we should have got. So, for your afternoon 0-day play, you should be pretty good to go by around 1:30. And let this 5-year come out and, give it a little room to wobble. Should be good after that. All right, we're still range bound. Still doing the same thing that we've been doing. Absolutely nothing. The range right now, 40.50 to the upside, 39.50 to the downside. 100-point range that we've been in for the last 3 days. The current day that we're seeing here is the current day. So, when it comes to Thinkorswim, you don't normally see things on a daily chart until after 9:30, but the futures are one of those where you do see them. This is a pretty tight range, all things considered. I know 100 points might not seem like much, considering, some of the moves that we've had lately. But that's a pretty tight range. We tighten all this up by thinking about the moves from yesterday. So this is a really tight range. It's very unlikely that we're going to stay inside of this range for today. Now, we can. I don't want to make it sound like we have to leave, because we don't. We could stay in this range again. But if we close inside of this box today, we will then be in IX10 setup. One inside day, it's just an inside day. Get multiple inside days, start getting into IX10. So I'm really looking to leave this range today. But we would still have the greater range to deal with, right? That 100-point range that I was talking about a moment ago. But one step at a time, we first need to get out of the little mini box here, get into the bigger box, which would then get us into a bigger box and into yet a bigger box. You can start to see the problem, right? That we've gone nowhere since like November of last year, and we've just got this big, massive range. Volume's a little light this morning, implying the market is waiting for something, that it doesn't necessarily like what's on deck and wants to wait for an announcement or some news or some econ to come out before something else, before they start piling in. So we're less than 100. It's 100,000. This should give you pause. The market is waiting on something. And if we don't know what that something is, then you want to be a little concerned. When you come over and look at what's on the agenda, none of these were really showing for, a high anticipated impact. And take it back to, FX Street. Now, don't get me wrong, it's not the idea that they have no anticipated impact, just not enough to give us such a light volume this morning. So it's very likely either either of these two speakers are what the market is waiting on. So if you're thinking about doing a 0-day through the whole day, which, I'm not really a big fan of, but I know it's popular, you might want to at least wait until the volume starts to pick up, or one of these two speakers get done, and see how the market takes it after that. It is important to note that the 2-year continues to advance. Just have to see how it shakes out. But it's going to be a full day today. And right now, this volume is screaming that the market is standing on the sidelines waiting. So we're still above the weekly pivot, but that doesn't give us much comfort when we can't seem to get away from it very far. Inside day, tight range. We have a very narrow IB. IB is initial balance that starts at 6 o'clock and ends at 7. Think of it as an open range in the Globex, only you don't get to choose how long the open range is, right? When we do, like an RTH open range, 5-minute, 15-minute, 30-minute, we can kind of decide what we want. When we talk about the IB, the initial balance, it's always 1 hour. It starts at 6 and ends at 7. The implication of a narrow IB is this, it implies that work still needs to be done, right? That they haven't accomplished anything yet, and that basically have the capacity to make a decision to push the market in one direction or another to get their work done for the day, as opposed to, an IB that's really wide, say like yesterday, where they'd already accomplished everything and they really didn't have nothing left to do through the day. No agenda, no push. 10-day, 30-minute volume profile. We talked about losing Monday's volume and how the bottom of this thing would tighten up. We're now in that situation. It's tightened up a little bit. By Thursday morning, we're going to lose the last of this volume down here, unless we happen to retest it, right? When we're at the high, we expect to go to the low. When we're at the low, we expect to go to the high. We had started that process, stalled out against the point of control, and kind of came back up again. We still didn't get back to the high, but we haven't gotten back to the low yet. It's very likely that by the time we get back to the low, it will be 3,900 for a low, right? Because that will be the new low. We'll have lost this. If that doesn't make sense to you, for every new candle we get here on the right, we lose a candle on the left. I have never counted all these up, but just suppose there's, I don't know, 1,500 candles sitting there. And it's always 1,500 candles. So every new one that we get, we lose one on the back. We don't have a shape, no classic shape like the P or the D. And the point of control for both the TPO and volume profile are perfectly aligned. Absolutely 100%. Right now, 3,950 has to be viewed as a significant level of structural support. We don't want to think of it as support like it's going to actually hold the market up. More of just, if we get a move to the downside, we very likely are going to see price respond and react at that level and be defended there, get supported there by traders looking to defend the market. We can see their actions before with all the heavy volume there, and it's where the point of control is. So it's likely to see traders attempt to defend that level. If we break through it, it gets really shallow, and we move through shallow areas quickly, more often than not. So if we break 3,950, it's very likely we go to 3,900 fast. We could easily get to 3,850. So there's nothing down there to really help us out, slow us down. we do have a range right now. And like anything else, if you have something to measure, so measuring this range, that's basically Monday's price action. And then projecting it to the downside, 39.79, let's call it 39.80. And then 39.60, and then the point of control, and 39.40. Mapping out the 5x5. So you can see there's really nothing from Friday's price that would help us out. And until we get down to 39.50 with that VPOC, there's really nothing to assist us or support us or help us. So if we break 4,000 on the ES, we're very likely going to 39.50. But, just kind of keep in mind that we can wick down there and come back in again. And if we did, it would just be a double bottom at that point. And double bottoms are bear traps. So your first instinct should be that it's going to rebound and move back up in the other direction. And we expect it to go lower than the previous low. That's what it's designed to do. Can't really trap traders if you don't entice them to get in, right? So when you have a range and you've got price that has set a low and then it's moving around, maybe comes back and tests that low. Well, we need it to go lower than the previous low. That's why it's a trap. And then come back in again. So in this situation, with the low that we have set on Monday, we could overshoot it, go a little lower, suck in all the bears, trap them, squeeze them, and then pop it to the upside. We don't even really need to get into this. We're still where we are yesterday. So we are the same distance away from the MA or less, right? The moving average comes towards us just as much as we move towards it or move away from it. So we got nothing. We're not overbought. We're not oversold. We haven't moved too far. We certainly didn't go too fast. We're nothing. And looking at the weekly expected move, we are right where we were Friday. Friday, we closed at 40.11, the cog line. And this morning, we're just barely underneath that, 40.09. So we've done nothing. And it really shows the lack of a narrative out there, right? The market is looking for some serious guidance one way or the other. Right now, it doesn't believe the Fed, so it's looking for guidance from somewhere else. The Fed, of course, is saying they're not going to cut and that they're going to continue to raise rates. And the market absolutely does not believe that and have already priced in 3 cuts for this year. All right, so we still got yields advancing. Critical level would be, say, if we get around 4%. We're not there yet, but we're moving in that direction. But until we actually get to 4% or above, we're not looking at the 10-year to be dire right? Put a little asterisk on that. If the 10-year starts moving really fast, making big moves, that would be something to be concerned about, alarmed about. But just this continued grind higher in the 10-year, as long as it's staying underneath 4%, should be all right. For the VIX, if we're going to see the S&P rally and break out and really start to stretch its legs to the upside, we need the VIX below 20. Got a long ways to go on that. And bonds, we're looking for some stability there, maybe around that 128 area. So just getting down below 130 isn't enough. And we still continue to see the classic old school stock bond split, where if one is going up, the other is going down. This only recently has come back again, right? For a long time, that kind of 60-40 well-rounded portfolio was, okay, it was like, it was done. So it's kind of coming back into vogue. It's coming back into flavor. A year ago, we were seeing stocks and bonds moving in the same direction. And now we're seeing stocks and bonds moving in the opposite direction. So when they're moving in the opposite directions, that means we're moving with yields. Yields going up, S&P going up. Now, obviously, they're not perfectly aligned or perfectly in sync, because the 10-year this morning is breaking to new highs, and the S&P is still range bound inside of yesterday's price action. So it's not a perfect formation, but this will also break apart at some point. They're going to split, because if the 10-year starts getting too high, starts going too far to the upside, that's going to cause the S&P to go down. They might both be going up just because bonds are going down and stocks are going up, or vice versa. But if the 10-year gets a little ahead of its skis, we will see it start to decouple from the S&P again. I mention this because it's something worth watching, right? It's worth keeping your eye on that, rather than thinking, well, yields are going up, the S&P is going down, or vice versa, and looking for this teeter-totter inverse reaction, because those aren't the kind of things that we're getting right now. That's what we were getting, a couple months ago. Nat gas down another 1.25% this morning. As we've mentioned before, if you think about Wyckoff or Dow theory or something like that, the classic accumulation distribution patterns, all them old school charts. Well, this would be a textbook example. It very likely is going to chop around down here for quite a while. Could even set new lows yet again. And it's not done, not even remotely close to being done. If you're looking for a long-term trade in this thing, think about the fact that long-term, you could be holding it 5, 10, 15 years, perhaps. So take the patience to get into it, right? There's no reason to get in right away, or to get in with your full size. So, you could start with just maybe 10 or 20% of your entire position. Start to average in your position a little bit at a time until you've reached your full position size. This has a lot of work to do before it has even begun to heal, let alone gives any indication that it shed all of this distribution. We don't know that it's done yet. Classic double bottom, by the way. set the low. We went deeper than the previous low, trap everybody, come up against them, squeeze them and spike them. That doesn't mean we're going up, by the way. For some short-term trades, this does have a TRB setup. And with that TRB setup, if we do break to the upside, we could see 8, maybe get this gap close at 832. We would be looking to kind of run that machine gun pivot reversal. The idea would be that as we push, say, get this gap closed, and we get above this, we trigger the into those stops, which would push us even higher, trigger into those stops, and then into those stops, and then into those. That's the idea behind it. It's not mine, right? Rob, the guy that created the strat, it's his logic behind it, or his phrase, his concept. First, we would have to recover and get all the way through yesterday's price action. So we're still looking for what I call the recovery day before we get the TRB. And right now we don't even have that. So we're not looking for the setup to trigger today to go long. Even for a trade, we're not there yet. We do have the KWeb names popping off this morning, up 3%. And there's news on a number of those China names, those China ADRs. Here's Alibaba talking about splitting the company into, I think it was 6 pieces, each one of them with the ability or capacity to IPO. It sounds like they're breaking apart a lot of their media side, but don't quote me on that. So that's given a little bit of push to things like Baidu, PDD, JD. Those are some of the more well-known China ADRs. And they've put those into the NY Fang that we watch, right? That Fang index. I should say they were in here. It's interesting that they're not now. Trying to figure out what it was replaced with. Looks like they brought in AMD and Snowflake to replace Twitter and Baba, because Twitter and Baba was in here the last time I had looked. I don't keep track of this thing on a day-to-day basis. These are the names that are in that NY Fang that we look at every day. So we got a couple of chip names, right? AMD and NVIDIA. So when you see Bitcoin moving around, you know it's going to very likely impact the monsters of tech, since some of these are in that basket of stock as well. Right now, we're really close in Apple to starting an inside day breakout. And I know that this little bit doesn't show up well in the Zoom, but the bid and the ask are at 157.65 to 157.71. 157.68 is the low of this indecision day. And it already is a breakout from yesterday's price action. So Apple is inside day breakout, but it's stuck in this IX10 based on, let's go back to 157.81. And we're underneath all of that in Apple this morning, right? So we're opening up down here. If we get through 157.38, we could get down into 155. We're really not looking for Apple to kind of give back that move that it had, right? So we're not looking to see Apple get down to 145, 140. We're looking more for some temporary weakness. And it's not just in Apple, but in the fangs themselves. So temporary weakness is different than I think it's going to go down, right? It's different than a short. Not going up doesn't necessarily imply we're going down. We also have Bitcoin up this morning, 1.5%. That should feed into semiconductors being up this morning, and kind of see how it all ties together, right? Semis aren't up if we're looking at SMH, but just because we don't see SMH up in this list could just be that it's not getting the flows enough to register. So we can see that there were some transactions, but they're just very small, right? Not enough to really move the needle anywhere. So the way NVIDIA opens today, where it is and how it moves around, this is the box. Yesterday's just an inside day, it's one day. If NVIDIA closes inside the box again today, we'll at that point be an IX10. We're not there yet because we've only got one inside day. Here was the last, and this one isn't even a good example, IX10, because we did wick down and then come back up to close inside the box. If we look back at the bigger candle, this indecision candle from back here, then we are IX10, but that's a really wide candle. And there's really no anticipation of a big move when you're stuck inside of a wide candle. You're going to spend most of your effort just getting out of that candle, let alone actually making a big move on the day. NVIDIA is still not a short yet, by the way, right? So we don't have a short trigger, and it hasn't given any short signals. You could look for a TRB, little short duration play. But think about the fact that we closed down here. So we would have to rally up, then break over the trend line, and then break out of yesterday's price, trigger into those stops, get some push to trigger into the next levels of stops to get more of a push to trigger into these levels, and then get that push up to like 279 and above. But so far we don't have any of that. So it's not a short, and we're not in a good spot to go long yet. So I mentioned US dollar Japan at the 128. You kind of see why I referenced it. Now we have a monthly level down there, 128.69. Japan continues to be this area of the world that we know there's a lot on the table that could bleed it with systemic risk around the world. It's still quiet. We still don't really hear anything out of that. I seen an article yesterday that their 10-year government bond hadn't moved at all in 24 hours. And they said that something that hasn't happened in over a month. So it's just this deep, quiet pause. It's a little unnerving, really. So nothing out of that yet. But it continues to be the one place that I'm watching closer than, well, Europe or and anywhere else right now. With this fade down in US dollar, Japan should continue to see gold doing well. Get a little bit of a bump. At the very least, maybe get back up here to close this gap at around 183. So what we're looking at here is how many names in the NASDAQ are up at least 0.5%, and it's only 11. And out of those 11, some of these are those China ADRs, JD, PDD. So that's not really enthusiastic. And then there's some chip names in there. Again, not much to it, right? Nothing there that would really light a fire underneath this market. No, I don't see the FANG names in there other than Tesla. So nothing really. And for the S&P, how many names are up at least 0.5%? 5. Financials more than anything else. And for names that are down, only 5 for the S&P. And only 2 if we count Google once instead of twice for how many names in the NASDAQ are down this morning. So as you can see, it's a market holding its breath, waiting for something, which we already knew, right? At the beginning of this entire thing, we started the morning briefing looking at the overnight cumulative volume and seeing that it's not even at 100. So we know that this market is looking for something. So you really want to wait for that to unfold to get some sort of resolution to this before trying to at least try to get in your 0 days, right? Even for anything else, if we can get the setup and start taking it, fine. But getting caught in a reversal. So we basically got a whole market sitting sideways, waiting for a catalyst. Everybody is just really sitting on hold, waiting on that. The range that I've defined over the last few days is still the range that's in effect. Nothing new has changed. And that's it. I mean, that really just sums it up short and sweet, simple and easy. Everybody be careful. Have a good day. I'll see y'all tomorrow.